Adrian is a venture capitalist who went from using the phone and cumbersome paper checks to invest in Wall Street all the way through to Bitcoin and beyond into decentralized finance. A big puzzle piece clicked for me on this episode. Here's Adrian. Welcome to Satchats, the Bitcoin podcast where we chat about sats. Sats are the smallest part of Bitcoin, the same way pennies are the smallest part of a dollar. With Satchats, we are building the world's biggest Bitcoin welcome center to serve as your gateway to generational wealth. So if you're brand new to Bitcoin, we want to chat about sats with you. Head to satchats.com to grab your slot in the studio today. I'm your host, Stuart, Bitcoin Maxi, who wears prescription sunglasses to protect you and your loved ones from my Bitcoin laser eyes.
And I'm your co-host, Chris, founder and CEO of Ithaca Hummus, proud multi-coiner and smash buyer. Stop, head to YouTube, go to Satchats and smash that subscribe button. Just like I smash by and gobble up all that Bitcoin every time I have a little extra free cash. If you do, you'll be entered to win 1 million sats. We're going to make you a satillionaire overnight by dropping 1 million sats on your head as long as you are one of our first 1,000 subscribers. We'll be picking one of you, one lucky among you of our first 1,000 subscribers to win 1 million sats. Also, when we get to 1,000 subs on YouTube, we are going to unlock a live show Friday morning, 10 a.m. Eastern Standard Time. Hop in the chat, come join us live, chat about sats with us. One more thing, we got number 54, Adrian here. When we get to guest number 99, guess who's coming on? You got any guesses?
The big boss.
The end boss. Oh, Stuart's wife. Stuart's wife, number 99, Kristen, is coming. Okay, sometime we're calculating in like the June time frame. We want to do that sucker live.
So live.
We want to do it live. So you got to help us get to 1,000 subs by then.
So smash the subscribe button. Each time you do, a Bitcoiner gets his laser eyes. Join us on the road to number 99 and help us get to unlock that live show between now and then. All right. So today on the show, we have got Adrian of Mendoza Ventures, which is a venture capital firm. He's up there in Boston. They're making more Boston. They're devaluing Boston. Poor Boston. We're going to get Adrian's Bitcoin story here today, and I bet it's going to be a good one. But before we do, Adrian, help our satillionaires listening get to know you a little bit.
Yeah, guys, I'm early. So take a step back. I was a tech founder, sold our company mid-2015, right at the rise of fintech, Bitcoin, blockchain. My wife and I started Mendoza Ventures. We're a VC fund based here in Boston, now office in Silicon Valley. And we started investing in companies. And we, again, we were talking before, sometimes VC is the riskiest of the riskiest, but we de-risk it by knowing the space and haven't had the last 10 years of experience in building and selling fintechs.
So you work very closely in the financial realm with your wife.
Yeah. Oh, absolutely. This is a family business here, guys, just like you and the big boss. Yeah. You get that. Maybe we'll do 100 and then my big boss will come in.
Oh, yeah. I want Adrian's in boss on the show.
Oh, yeah, man. She is like the powerhouse. Has been presenting at the White House last year. Like, she is the big boss.
Man, I'm going to come out of that like Rocky with the swollen eye. I'm going to be like, Adrian! But I'm going to be how to you. I'm like, how could you do this to me, Adrian?
Exactly. And the big bosses are going to come out fighting, and we're going to be the ones taking the hits.
Yeah, man. And dude, I love that, man. I think there are so many men out there today who are, they love their in-boss the same way I love my in-boss. I adore my in-boss. And, I just want to do everything with her and be in lockstep with her. And to be clear, because I had a nice clean comment on the YouTube about not getting too insane. She loves me and supports me. She lets me buy $50 a Bitcoin a week, and we saw from Blockchain Wayne that's all you really need over the years. But I want to get her on the show and get her to a point where she's ready to yeet all of our finances in its entirety into Bitcoin.
We're trying to turn Kristen into a maxi.
A maxi. We want number 99 Kristen to finish her episode with laser eyes.
Yeah.
So what was the tech company that you built and sold, Adrian? What did it do for the marketplace?
You guys ever watch Silicon Valley, the show on HBO? Remember where they build this mobile distributed computing platform? I built that in 2010.
Wow.
And then we had like all the big brands on it. And then we flipped that company to an ad tech in 2014, had a few other big names. And then in 2015, the board said, hey, go find something to do. And I'm like, you don't have to tell me twice. So we took our winnings and we put it into venture. At this point, like even riskier than Bitcoin. But just like Bitcoin, man, there is a risk involved, but with high risk comes high reward.
So when you started that company, did you have a revenue model, or did you have to build that as you were chugging along?
So the first company, we had a revenue model, and we had a sales team in the Pacific Northwest. We were selling to Lululemon. We were selling to Columbia Sportswear, all the apparel guys. And then the second one, when we pivoted the company, the board said, hey, I want to make it bigger. So what are you going to do? So they literally were like, came up with an idea and said, hey, we're going to be embedded in games, and we're going to segment all the data from customers and do an arbitrage between suppliers and vendors. And every ad that year was being powered by us. So, and then we were doing like early AI matching. We were building early cybersecurity. We were in the earliest of the earliest, because before that, I bootstrapped my company working for the banks. Like the first mobile app that went through FINRA was me. Like we sent them a phone because they had no idea how to even look at it in 2008. So we were in like the earliest of like putting like the big brands on mobile apps. Like that was where I came from. So by the time I went to my company, it was like, dude, we'd already done the most regulated of the most regulated. Let's build something for the brands. And then by the time we got to investing, man, I know all the worlds. I know about the banks. Let's start investing in technology for them.
So that's wild, right? And the heady world of finance, arbitrage, venture capital can be sometimes a little daunting for someone who's trying to learn about Bitcoin. I had to go through a huge arc to teach myself more about finances and how they work, to even be able to compare Bitcoin to it. When it comes to Bitcoin, where I kind of want to break it down into what was it like for you before you found Bitcoin? How did you find Bitcoin, and what was that like to learn about it, maybe struggle with it until it clicks? And what is it like now that you've been happily in this space for a while? So, step one, what was it like for you before Bitcoin?
I mean, I'll tell you a really good story. So I go back to the tech industry, like the .com boom here in Boston and San Francisco back in 99. That's how long I've been in this space. I'm not dating myself. Like we were in that space where there were websites called fcompany.com, and you'd go to see who went out of business that day. And you'd hear stories of, hey, someone just gave someone a bunch of trash bags to get the rough out of here. Like that's how crazy the .com industry was. But then out of that, like you had things like E-Trade and the ability as a retail customer to buy public equities. Like that was unheard of. Like if you that in the 90s wanted to buy something, you wanted to buy a share of Apple, you had to have $10,000 to $100,000 to call a broker on the phone and say, hey, I want to find 10, 20,000 shares of Apple. And then that guy would call around looking for someone to buy it, going back to the arbitrage thing. So then dot-com boom comes, you've got things like E-Trade. So perfect example, like I dot-com boom, I went to IBM afterwards. I was at the innovation lab, and Apple had just plummeted and was trading at $15 a share. Like, and so I'm getting laughed at because I'm like, I want to buy Apple. And the only thing I have in my E-Trade account is like $300 or something. That's what I was able to buy. And people were like, dude, why didn't you buy more? And I'm like, yeah, in order to get money into E-Trade, you had to send them a physical check. And then in 3 to 4 weeks, it would get loaded into your account so that it's settled. And then you would buy it. And then maybe in a day or so, it would settle and you would finally own it. Like, that was the world then. Before that, it was phone. After that, it was sending checks. Like, there was no funded through credit card. There was no funded through other tokens. There was no other funding it through PayPal or Venmo. All of this didn't exist. So then you chug along, everything kind of crashes post.com boom. Nothing happens. It's a wasteland. Like, Boston is like the hub of the dot-com boom was up by MIT, wasteland. Silicon Valley was a wasteland for like 2 to 3 years. Starts coming back. Then we got a second tech wave, 2009, kind of is the, right at the global financial crisis. And that's when you start seeing these early rumblings of, hey, there's this new type of security out there. But like, everybody thinks it was like, man, I could just find a guy. Like, when we were first approached by people that were like, hey, do you want to buy Bitcoin? It would be like, hey, man, you want to buy some Bitcoin? And I was like, all right, where are we going to buy it from? He's like, well, there's a guy in a van outside in the alley. And he told me if you give him $1,000 in cash, he's going to give you a USB key with a key in it. And so when you get the first run of like ICOs, people selling Bitcoin, 99% of it was fake. It was fraud. There was people doing ICOs overnight, raising like $1 million in ICOs, gone the next day. There was no ICOs. There was nothing. Like, that's how much the wild, wild west. But that's where the real money was made, because if you got in early, guess what? And you sold, you weren't paying taxes on it, because the IRS had no idea what a Bitcoin was, what an Ethereum token was. Like, their first 5 years were like the golden age, because but at the same time, you took a loss of, 100K, you couldn't write that off. That currency didn't exist. No one knew, but no taxes on the gains. So people did really well and never paid a cent in taxes. It was like your reference with eBay. Like, for years, for the first 20 years, people were making $100,000 on eBay, not paying taxes on it. But now we live in a world where your CPA, your taxes are asking you, how much digital currency do you own? How much, all right, well, that's an asset. Now we can look at it as a taxable income. So people have gotten smart.
Do you think that crypto? No, sorry, I hate that word, crypto. Do you think that Bitcoin will move from a tax treatment of being treated as an asset to a commodity?
So if you look at, perfect example, I've got a good story. I'm in Ventureland. I know a guy who started one of the first blockchain funds, and half of it was investing in startups. The other half was investing in tokens, ICOs, Bitcoin, Ethereum. And then you would have like companies at that point. This is even up to like 5 years ago. People would give you like, oh, you're investing in my tokenized so-and-so, I'm going to give you some free tokens. Well, these guys had a bunch of this. Bitcoin, Ethereum goes up. Little known fact, 99% of all tokens are backed by Bitcoin and Ethereum. So as one goes up, the market comes up. Well, the SEC walks in and says, hey guys, you're no longer a venture fund, you're a hedge fund. And next thing you know, it's an asset. And they're reporting it as an asset. Like, people have gotten smarter on it as how do you treat it? But the Joe individual on the street still has to report it as income, even though like it's in technically unrealized gain until you sell it. They're still tracking it, and because they know that at a certain point, like you're going to have to pay somebody, and it's going to be the IRS.
It's insane to think about how much work they do to track all this just to make sure they can get their fair share once you're done making the right decision, right? They get a
Absolutely. But part of it is also thinking about how you make decisions. The big thing I tell everyone, everyone's all excited about, man, I'm buying my Bitcoin through PayPal. I'm buying it through Venmo. I'm buying it to somebody. And I'm like, whoa, 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 stop the presses. You do know you don't own it. PayPal owns it. Venmo owns it.
Coinbase
You're
owns
just
it.
a little line on the ledger. And by the way, the day they want to take it from you, they can because you don't own it.
Why in the world Fidelity custodies their own Bitcoin for their ETF? Why would BlackRock trust Coinbase or use Coinbase to custody their Bitcoin?
Well, it's so that when you look back at it, like BlackRock, this is new for them. Fidelity had started looking at Bitcoin blockchain experience back in 2010. Like this is 10 to 15 years of the making. Like I knew the guy. Like the guy who ran the Boston's Bitcoin meetup was a friend of mine, was actually one of my investor references for Fidelity. And he was the one that set the groundwork for them. And they had fits and starts. They were trying things. They were like, okay, we're going to do a blockchain network for rewards for our employees. So this is like them to custody it has been 10 to 15 years at the making. But at the same time, like in the beginning of those meetups, there was also State Street coming in and we're like, well, we're trying things. They gave up. They're like, nope, we don't want to do it. So BlackRock, having not done any of that work, is going to be like, okay, where is the biggest place that we can custody it? So let's look at Coinbase. Let's maybe look at Circles. And so in order to be truly independent, like it's really hard right now because people are kind of dancing on the edge of, do I do my own custody and take the risk? Because for the past 5 years, so I'll talk about the regulatory side. Like 5, 6 years ago, like the SEC was like, you guys are up to something. I'm going to sue you. And you're like, dude, it's a utility token. Like I'm trading my own stuff. No, we're going to sue you. And then they were like, drat. And then Trump came into office once. And the only great thing for us is, you know, Bitcoin token guys came in, was he created a sandbox for the SEC. So the SEC created a sandbox where you could ask questions. Like, I have this thing, token. It's backed by so-and-so. What, are you going to sue me or not sue me? And so there was a lot of flexibility. And then we kind of went back into them not doing anything, not approving any new exchanges. And now we're back at, they're like, we're going to approve everything. So it's a wait and see. But that's the hard thing, is when you find a big brand, like they would have to take the risk that at a certain point the SEC could come in and say, dude, you can't do that anymore, shut you down, no more exchange, goodbye.
So it sounds like you were introduced to, I mean, you kind of lived in this world of first using the telephone to purchase things and then using kind of an e-trade experience that was cumbersome, right? And
slow.
Yeah, kind of sending the check in, then a couple of weeks later. I mean, it sounds like it took you a month or more to buy $300 worth of Apple stock, right? And it's so interesting because I mean, I was a teenager at that time, and even I have forgotten to an extent, you know, what it was like to live during that time, because there is so much you can do online quickly these days that it's like, well, wait a minute, you know, I mean, and as a teenager, it was more like I was memorizing the phone numbers of my neighborhood friends so I could call them from my house phone to see if they could come outside and play. But you were, having to use these almost manual, human-centric tools and processes to start to build some wealth for yourself on Wall Street. So it sounds like after that, in the 2009 or 2010 space, you were introduced to Bitcoin by some guys who were kind of like, oh, it sounds like buying drugs behind the.
I think buying drugs was a little safer than buying Bitcoin at that time.
Buying drugs was safer than buying Bitcoin. But and I want to take a minute. How many Bitcoins do you think would have been on that USB stick in exchange for $1,000 to the guy in the van?
Man, I think going back to the price, I mean, maybe you could have owned 10 at that point because it was so early on. I'll tell you a good example. Like one of the CEOs of a company I invested in, around that time, he goes to a trade show. And the trade show, they're like, hey, here's a little plastic Bitcoin with a key in the back of it. And by the way, it's 1 Bitcoin. They're giving them away for free. Like, take this. And the guy's like, ha, ha, ha. And this is a guy that's like ex-State Street fintech founder. He like gives it to his son to play with it. He forgets about it. Bitcoin's at 20, 30,000 at that point. He's like, where is the key? Where is that damn coin? They ripped their house apart. Couldn't find it. They just lost $30,000. I mean, that's how much it went up because, kind of, it was interesting because what helped it go up wasn't the trading, it was the explosion of people that were mining. Because it was funny because in like 2016, I remember talking to someone at one of the big finances houses, and he was like, dude, are you worried about security? And I was like, no, because if you had the compute power to overwrite a block in the blockchain, you had enough compute power to like turn around and just mine for your own coin and go from there. And it was funny because I talked to another founder that's in Silicon Valley, and after a while, and this is a guy who's like geekier than I am, he's got a data center in his house because he's like, I don't want to pay AWS. I'll just build a data center in my garage. And we were talking about Bitcoin stories, and I love his. His was like, yeah, he's like, I had a bunch of 4 or 5 computers lying around. So he's like, I created a fast Bitcoin farm, and we were mining, and every time I'd get a fractional share or one, he had a script that would turn around and sell them instantly. And after a while, he just got bored. And he was like, my wife was like, what, dude, what's with the power bill? Why are we like, it's getting kind of expensive for us. And then after a while, he was like, okay, I got to stop my like experiment. But he did really well. Like, but that was the possibility that you could stand up a farm like overnight and you could still win proofs and you could still get paid. That's not the case anymore.
Real quick, Stuart has this great line when we talk about security and the potential risks to the Bitcoin network, which is something like Bitcoin is programmed to turn its biggest threats into its biggest friend.
Supporters. Supporters. For you to become the biggest attacker of Bitcoin, you'll go on a journey that will end with you becoming the biggest supporter of Bitcoin. Because to your point, Adrian, you'll have amassed enough computers to be like, you know what? Why would I destroy this thing and make it worthless when I have enough power now to solve a bunch of blocks and get rich? Like, are you kidding me? I mean, it's this wonderful thing. It sounds like the first time you were introduced to Bitcoin, however, just like almost every single person we've ever met, you're like, no, I don't know what that is. That's weird. That's sketchy. I don't want files on a USB stick for $1,000. There's no way that's a good trade. What happened between that alleyway van moment and the moment when you were like, whoa, hang on, Bitcoin?
Yeah. It was when you found real wallets and real exchanges where you could plug in bank accounts, cards, PayPal, whatever to pay for things. Because early on, it was cash transactions. Because the only way to get it is you didn't really have to go to a miner. And that's where you were getting your key from, is someone had to be mining it. You had to exchange cash. And then sort of the next iteration, there was a couple of people that were doing Bitcoin ATMs. I don't know if you guys remember the Bitcoin ATMs. Like those were wild. And I know a couple of people that were, but again, they were cash. They were like, you put your cash in, you get a USB key out. And like people were, these stories of Silicon Valley cowboys losing like the USB key, those are real. Like I was talking to a startup 5 years ago and they're like, dude, we're buying like wallets where people have lost the keys because we think in the future there's going to be quantum computing to be able to unhash them and unlock them. They're still waiting. Still hasn't happened yet. Like once you lost that key, you were host. That's it. But like when you actually had real exchanges where they're on your phone and a real wallet that are on your phone or your desktop, and you could actually track it right next to the other assets that you have, that was the big change. And then we had the big run of, the Robinhood doing it, the Venmo doing it, the PayPal doing it, where I go back to the point of you don't own it yet. And that's kind of where we are right now, is it's really become commercialized. But also like when you're selling it on Venmo and PayPal, because every time one of these comes out, I try them, I buy them. There's no single wallet I have now. I try it against everything because that's how you diversify. And I buy it and I sell it. But I want to see how it works because I'm a fintech geek. Like I want to see every time a new fintech comes out, I try it on. Like I'm like trying it. I'm doing like if it's a lending something, like I'm filling it out myself because that's how you try things. So all these wallets, I'm like tossing, $50 here, $100 here. Let me see what happens when I buy. Let's also see what happens when I sell and see where that goes as well.
How did you feel when you saw Bitcoin getting commercialized, getting legitimized, turning from a, cash transaction for a USB stick or some of these ATMs, to something that felt packaged up, sanitized, accessible? Did you feel like Bitcoin were going to change the world? Did you feel like it was going to maybe not change the world, but just take its rightful place among other options for building wealth? How did you feel when you decided that Bitcoin was valuable?
Well, it's interesting because I'll go back to 2016. 2016, when we started Mendoza Ventures, myself, my wife, there was another guy helping us. We got together for lunch and we're like, let's throw a topic out there. Crazy. Let's ideate on a topic. And the topic was, how do you become a bank? First part of the lunch, we're like, you got to buy a banking license. You got to borrow someone else's banking license. So that's where you saw neobanks, challenger banks. Like that's expensive proposition. Had our lunch. And then we were like ideating for the second thing. All right, how do we become a bank without a banking license, without becoming a neobank, without becoming a challenger bank? And that was using Bitcoin, using tokens. If I created Puppy Coin, I could inherently lend Puppy Coin. I could send Puppy Coin to another country. I could trade Puppy Coin to another currency. Like that was that big push where at an inflection point, what was interesting and that got people excited about Bitcoin also went into the other direction, which was about decentralized finance. And that's where the real big picture is. Because if you think about going back to my example of we're on the phone and then you've got these e-trades, and then in 2007, 2008, you have an iPhone finally. You're still not doing real finance on it until like 2008, 2009, and you're barely checking your bank account. Well, compared to this world, if you wanted to build a mobile app that had a bank, you had to connect to a real bank. You had to do all these things. That was a really expensive proposition. You had to go to these service providers that were connected to banks. Right now, using decentralized finance, you could inherently start your own bank, your own fintech app in a matter of days and weeks. Like the decentralized finance, so that you guys know when I talk about decentralized finance, it is finance that's powered by tokens in Bitcoin and tokens that are either, you know, stable coins that are going to US currency, tokens that are focused on using Bitcoin as an underlying asset where you can buy, you can sell, you could trade, you can bank. All of that is the ability to like get someone creating a fintech app in your house overnight. And that's where the real power, where I get up excited about, because I was interviewed by one of the banking magazines. There's actually banking trade magazines that all the bankers read. Like American Banker is one of them. And people are like, oh my God, you were an American banker. I'm like, really? You read that? And every year they ask me like, hey, what's the future of Bitcoin and blockchain? And I always say, well, it's decentralized finance. So then this year they asked me, what do you think is going to happen with regulatory changes, with the new administration? And I'm like, here's what's going to happen is all the banks are going to rush to come in and be like, uh-oh, I got to figure out all these coins. I got to either be a custodian. I have to be a wallet. Like all the traditional banks are going to realize, uh-oh, I need to be part of this. So they're going to run in to get a bunch of these assets, get all of our Bitcoin, be like, hey, you don't need it in that random wallet. You should go to your community neighborhood bank, your Bank of B of A. We should hold it for you, like Fidelity does. And they're going to rush to jump in. And then towards the end of the year, they're going to be like, oh man, this is a cybersecurity nightmare. Because I'll tell you the two ways people lose money. We were talking about that risk of someone trying to overmine the block. That's again, as I said, no one's ever going to do that, because if you did, you'd be a Bitcoin billionaire. There's two ways that you get in trouble now. And the first one is like the one that happens, and most of these startups never even know, most of these business never even know, is software engineers use things like gems, which are extensions and software code snippets, to make their code better. And they're available everywhere. What the hackers have started to do is they don't care about hacking a business. They don't care about hacking McDonald's. They don't care about hacking like all these places. They put their mining software in these gems and they borrow everybody's compute. Because again, going through the trouble of hacking our social security number and all that, who cares? Versus if the CPU usage goes from 10% to 25%, no one's ever going to notice. And so therefore, you've got these hackers that are literally mining Bitcoin off the backs of these corporations that don't even know it. And most people in security don't even know it's a thing, so they're not even monitoring it. So that's one way. And then the second one which affects your typical Joe, out there, is phishing attacks for you to give up your password, where then someone walks in and just takes everything in your wallet because you gave it to them. That's the other common one.
Wow. So the concept of being aware and vigilant as an individual against phishing attacks that will trick you into giving up the seed phrase or otherwise some form of access to your individual wallet, and then bam, the Lazarus group, they're probably not going after you as an individual, but effectively a hacker is going to trick you into giving them access to your wallet, and then they're going to make away with your Bitcoin. That one's good. It's clean. I'm aware of it, and it's something that I try to be vigilant against every single day. The idea, because I come from a cybersecurity background, and we focused heavily on preventing attackers from getting inside the company and walking away with either money or, more commonly, data. More commonly, walking away with your information that they could either use in some shape or form, or potentially to just ransom it back to you, right? But the concept of your company's distributed computing power being more valuable to a hacker than your company's data is so fascinating to hear about. And if if a satillionaire listening could imagine a hacker getting into a company like Walmart, for example, not to get their competitive intel or their IP or their information, but to take thousands of company computers, up 15% in CPU usage, so that they effectively have a gigantic amount of mining power to just go and make some good, clean Bitcoin for themselves. It's unbelievable. It's unbelievable to think about that.
And we've seen it. It ends up in enterprise computers. It ends up in like people's phones. Like it is everywhere because you're not going to notice. You're not going to notice that compute is up by 10, 15, 20%. You are going to notice when it's up by 90%. And you're like, and they've learned their lesson. They don't do that anymore because that was the first trigger. But also like how many IT people, how many people at businesses are even thinking about what's compute? Like what is their CPU? They finally realize it when the damn machine is running hot. And they're like, why is it running hot? Why is it draining more power? Why is it really slow? And then they have to go in and start, like looking at logs. Logs don't tell you about compute. You've got to look at other, monitoring to be like, hey, by the way, you're running at 90 to 95%. But it's that subtle one now, because if you have access to 1,000 computers, including the desktop on someone's desk, and you're just slowly mining away, just doing your thing, you can make millions of just doing nothing.
Wow. Yeah, it's not like a malicious cyber attack. It's like a leech. They're leeching off of your compute, which is just so interesting, and part of the reason why I pushed my way into cybersecurity sales to get started, because the whole digital world is a fascinating one. It's the way of the future. And I eventually went from fascination with cybersecurity to fascination with AI, and finally fascination with Bitcoin. And I've been clamped down on the neck of that jackalope ever since. And actually, I'm remembering here, you're starting to maybe help things click for me a little bit. It almost sounds like you might feel more strongly about decentralized finance, or DeFi, as we learned from, I can't remember who it was. It was Mark, I think. It sounds like you feel more strongly about DeFi as a whole than Bitcoin specifically. And there might even be a way to operate like a bank where you have Bitcoin in your vault, so to speak, but you've created your own cryptocurrency, or otherwise token, that is, it's almost like it's backed by Bitcoin, to where you don't really need to move your Bitcoin. You just trade the token the same way America used to paper over their gold. Is that kind of what you're describing?
Yeah, absolutely. Because if you have an asset, because at the beginning stages, here's what happened. Like, probably I would say 2016, a few people were like, hey, we're going to start tokenizing things. And then you had to create a token, but there was still an underlying asset. Well, what ended up happening, like, I know a guy who tokenized a fund. And what ended up happening is the value of the tokens, because they were constantly being bought and sold, and they were backed by Bitcoin, the token got more expensive than the value of the fund. And they were like, wait a minute, the token is trading at 3 times value than the underlying asset. Like, we remember looking at a company and they were like, hey, we've got 17 million in the bank. And I was like, wait, you got 17 million in the bank? Well, I'm like, why are you raising venture money? So we look at the balance sheet, and he's got 17 million of tokens, because they were, in this case, they were using a stable coin. They were using like like I was like the UK pound or US dollar against that. And I go to him and say, great, well, how are you going to sell it? And there's like, what do you mean? I'm like, if you can't sell those tokens in an exchange, they're inherently worthless. So that 17 million that you have, not going to go anywhere. Yeah, I got bent out of shape, but I was right. Because the reality is it comes down to if you have a token, you've got to have an underlying asset that both of them are sellable. Because the token you may sell, you're going to use it, you're going to trade it, but the underlying asset still has to be good enough that you should be able to like buy and sell. And if you need to get out, you can get rid of the asset. It's when it's not, that's really, really hard to deal with.
Adrian, when I think about centralized versus decentralized, I don't necessarily think about that as a black or white issue. It's almost a spectrum. Would you agree with that?
So to take a step back, so that we talk about the centralized and decentralized, Bitcoin, Ethereum are on a public blockchain. Anyone can tap into it. Anyone can dip their wick into it and be like, oh, I own this, so and so owns this, the guys own that. I'm a big believer in private blockchains. That means, let's say we wanted to trade money between all three of us, we would have a private chain, and we're the three nodes. We each verify each other's transactions. That's where I'm still a big believer that that's the future. So we're an investor in a company that tokenizes assets. It is our deep tech investment. We've been in it since 2017. We started talking to them in 2016. They're finally on the edge of being approved for regulatory approval by the SEC. That's how long we've been in this movie. And it's for a private blockchain to trade and tokenize real financial assets. But the thing is, when you're buying and selling securities, when you're buying and selling shares, everybody knows who everyone is. That's how you stay safe. You know who the market maker is, you know who the bank is, you know who the broker dealer is, you know who the customer is. And that's how you keep it safe, because when someone accesses the network, and that acts more, private chains act more and more of a centralized approach because you know who the players are. It's when you open the aperture up to a public chain, that's when you can have bad actors, and that's when you have a mess.
So you actually feel like a smaller private blockchain is better than Bitcoin's big fat spreadsheet in the sky?
Well, my issue, and this is where a lot of people have gotten in trouble, is that they build an application and they're like, okay, I'm going to buy and sell securities, but they do it against the big Bitcoin network in the sky. And so therefore, when you have the roller coaster ride, as we've always had, we go up, we go down, we go up again, then you're decimating the value, because let's say you're doing really well and then you lose, I don't know, 10% of value in the next day, dude, and you just lent that money. Where you're going to have to eat that 10% of value. But if you do an intermediary layer where you have the asset, like you then have a token on top of that. So the tokens still kind of remain their value. I think the real thing is if you can build a private blockchain, whether backed by a stable coin or your own token, then you also have full control from a security standpoint, where you know that like you kind of know who's the one buying it, who's the one selling it.
Well, so that's I think it really depends. Like what are you trying to achieve? I think you're in the world of, and what you're talking about is if your mission is to engineer financial products, you don't necessarily want them to be tied to Bitcoin, because you lose control through volatility of Bitcoin, right?
Yeah, absolutely.
In that case, like where someone like me or Stuart, right, we want to buy and hold Bitcoin. We love the fact that Bitcoin operates on this distributed consensus, right? That's a selling point for us. But if we were to try to custody Bitcoin leverage it, use it as collateral, create securities off of it, do some financial engineering, that distributed consensus would be a liability.
Yeah, absolutely. Because the thing about it is, with the general public blockchain, like there could be like a day where you get no trading volume and you're flat. There could be a day that people are just buying like rampant. And there's no way to block it. Like, so when you take a step back for your listeners, like GameStop, when that meme stock started happening, the SEC had an ability to block trading. They stepped in several times. When Silicon Valley Bank went down, they stepped in several times and blocked the trading because they saw that there was a run, and they were like, and they're like, okay, we're going to stop this. You can't do it with a public blockchain. If people want to trade or they want to sell off, they will. And we saw a sell off already. 3 years ago, when started kind of crashing down, there was a massive sell off, and that drove the price lower and lower as people were selling off. And you see it now with the meme coins, that are out there. Like big gain if you're in really early and you can sell off. But that's, again, the problem is when you just can't halt it, and then it's just a runaway train.
And that's a problem if you have a high time preference, right?
Yeah. But you also have to think about it like this should be part of your strategy, your risk strategy. Your digital currencies and tokens and Bitcoin, that should be in your riskiest of the riskiest, where you're like, okay, like I tell people, like, you've got to have 3 buckets. You got to have your cash bucket. That's where you go on vacation, you pay your rent. You got to have your long-term bucket, which is like your 401k, whatever, where you're going to invest. And then you've got to have your risk bucket.
So I really like this chat about sats with Adrian because I feel like he's helped something click for me that I was struggling with when number 31 Victor was just spooling it out. And I was just, it's so fascinating to think about our beginners listening to me or Chris and barely hanging on the same way that I was listening to number 31 Victor talk about the next area, and I'm barely hanging on. But Adrian has really helped me. I believe a piece has clicked into place. So I tell you one thing, Adrian, Bitcoin and for you, the world of decentralized finance is much bigger than could ever be treated in a single chat about sats. So we do ask each of our guests if they'd be willing to come back on in 9 months to give us an update on their Bitcoin baby. And in your case, to help us continue to venture/adventure into the world of DeFi. Would you be willing to come back on in 9 for us?
Me and Puppy are always good for a good Bitcoin chat because you never know where we're going to be in 9 months.
Oh yeah, and Adrian's gonna send his end boss to the show to help me train.
You got to be number 100. Let's do it. Let's get to 99. Your boss comes in. Number 100, my boss comes in.
Let's recap the conversation here today with Adrian.
Yep.
He has been in the world of finance for a long time. And what I love about the chat today is that Adrian's love for fintech is you can just feel it.
Mhm.
And it's contagious in the best way. He was working over the phone and then through E-Trade sending a check, waiting for it to clear. I mean, the world of an individual trying to break into that space was not so easy back in the day. And he was even operating in a .com space where there was a website that just was like basically the death count of companies. Like it was like a public tombstone ticker that was just showing you all the companies dying in this age. But some goodies came out of it, survived. E-Trade as an example. A second tech revolution leading up to the financial crisis, 2008, 2009. Oof. That's also when Bitcoin came about. Some would say as a response to. Adrian's first experiences with Bitcoin was that it was more dangerous to buy than drugs because you had to hand over some cash to a guy who I guess would take it into a van and reappear later with a USB stick. It's like, what did I just buy? What did I just buy?
In a sketchy alley.
Not even on the main street. It's like, psst, psst, hey man, dosage, Bitcoin dosage. So, it wasn't until Bitcoin became, at least to an extent, commercialized in the 2015, 2016 space, maybe, where you could connect in your bank account. Maybe you could have a dashboard now to look at what you were holding. Maybe it felt a little bit more like that E-Trade style interface that made you realize, this is something. And for you as a fintech guy who built your own company with the mobile computing type scenario, flipping to ad tech, selling that sucker, and then just going into the world of high risk venture capital with your wife. I love your partnership with your wife, especially being in lockstep on your finances. I think that's something every husband wants. And I want that for me and for my wife. And we do have that. I just need her to have laser eyes the same way I have laser eyes. It's not good enough for her to work every day with me to manage our money prudently, build up an emergency fund, and to dollar cost average into Bitcoin. I have the disease of more. She needs to have laser eyes, and that's what we're going for. And I like that you have that partnership with your wife. So the venture capital opens up a world of decentralized finance for you. And the thing that really clicked for me today, number 31 Victor was talking about taking his Bitcoin, using it as collateral on a decentralized collateral blockchain that kind of produced a token that he could then take and maybe convert it into a stable coin, convert that into US dollars. Somehow he went through a journey to buy a home this way, and I couldn't keep up. But what you've been able to help me understand today, Adrian, is that you could almost have a scenario where, just like a nation state would stockpile gold and then paper over it like a token to make it easier for that value to exchange and intermingle, you could have Bitcoin and then make your puppy coin right on top, and you can use the puppy coin to do whatever you need to do without actually necessarily messing with the Bitcoin that's underneath. So it was really interesting to hear a Bitcoin-backed token the same way you would potentially have a gold-backed dollar, which of course we haven't had for 50 years. But the future of DeFi for Adrian, I mean, man, I'm not even certain I can accurately recap where we're going next, but it just made me excited. And I think it opened my mind a little bit to just not like ignore it, but like allow myself to explore it a little bit. Because if I'm so dead set on a digital future and I know Bitcoin is my money, I don't necessarily need to close myself off to the world of DeFi. I think we react very strongly to crypto because, to your point, 99%, like you said, scams, garbage, quote unquote ICO, $1 million raise, they're gone. Everybody gets rug pulled. But DeFi, the same way Bitcoin is not crypto, DeFi is not necessarily crypto either. So that's kind of cool. Adrian, we are going to make you an offer in exchange for your time, your energy, your story, and experience here today. Before we do, we are going to take a quick brain break and chomp down on some hummus.
All right, Adrian, we're going to quickly show you how we treat our sponsors around here. Our first sponsor, our foundational sponsor, what do we call it?
The venture sponsor in this case, man, took an adventure with us, didn't they?
The founding sponsor here at satchats is Ithaca Hummus, of course, my beautiful little hummus company. And today you selected the Everything Bagel. And Stuart's going to act as your taste buds and taste on your behalf since you could be here physically. Today, in the tryout slot, we've got popcorners.
Popcorners.
Okay. Who hasn't heard of popcorners?
I'm a Bitcorner. We got popcorner over here, dude.
All right. So, Adrian, we're going to take a little dip here. and try this out for you. See,
All right,
see how
fat
the
glob.
corners go with the.
Let's pull that through nice and sturdy. All right, cheers.
Wow. That's a
Immediate
great
on the
batch.
crunch.
Yeah.
Immediate crunch. Wow.
So good.
So that was like crunchier than I thought it would be.
Yeah.
It has a really nice flavor. It says popped corn snack. Does it kind of taste like popcorn a little bit, or what am I tasting there?
Yeah, I think so.
And
it's kind of like a rice puff.
a rice puff, popcorny, but not quite. But it has some like little seasoning on it, maybe.
That's the hummus, dude.
That's the hummus, guy. So the everything bagel, there it is. The everything bagels,
That
really, I'm
onion.
getting tricked.
Yeah.
A little bit of onion, a little bit of
good.
some of the stuff that goes on top of the everything bagel that always falls off on my hands when I'm trying to cut the bagel.
Yeah, yeah.
So popcorners today, that was delicious. Let's make Adrian his offer. But before we do, Adrian, if the Satillionaires out there listening want to engage with you, where or with your company, where can they go to find you?
We're on social media, LinkedIn, Instagram. Puppy's active on TikTok as well. So we're pretty out there. So people reach out. People send us company decks on X, on Threads, on social. So we follow VC Puppy on Instagram or follow at Mendoza Ventures.
Okay. VC Puppy or Mendoza Ventures. And we'll have those links in our show notes as well. Let's give Adrian his choice.
Let's do it. So Adrian, here at satchats, we believe in trading our value for your value. We appreciate your time, your experience, and all of your, wisdom that you shared with us today. So we're going to give you your choice of $50, which we will send to you somehow, Venmo, through the mail. It's going to be less than $50 by the time it gets to you, of course, or $50 worth of Bitcoin, which I've got the Clark Moody Bitcoin dashboard behind me. The exchange rate for one Bitcoin is $80,690 right now, which translates to 1,239 sats per dollar. I'm going to multiply that by 50. So you've got your choice between 61,250 sats, our gift to you, or $50. What's it going to be?
I'm all about sats, man. Let's let it ride.
Let's let it ride, Adrian.
Guys, if you Venmo'd me the $50, you know what I'm going to do? I'm going to turn around and buy $50 of Bitcoin or Ethereum on it.
Let's go.
Let's just
Let's
let you
go.
keep-
Let's let it ride. So we're going to let this guy ride his way back into the corner. Think
See
about
ya.
what he...
Here's what I'm thinking. The challenge we do is send over the $50 worth of stats, 9 months. Let's check in and see where our value went.
Yeah, let's see. Let's see if the value of those sats has gotten higher than $50. So I like that for Adrian.
Mm-hmm.
We're so glad you stacked the sats. You are number 54, 6 nines, which I love. And you bring our scoreboard to 49 guests who stacked the sats and 5 who need a little bit more time. So this is the part of the show where we ask our Satillionaires for their value in exchange for our value. The thing we value the most right now is your subscription on YouTube. Smash the subscribe button. In exchange, we are willing to enter you into a 1,000,000 sats giveaway. There are only 400 some odd slots left. Do not sleep on it. We will also unlock a live show Friday mornings at 10 a.m. Eastern. Like Adrian's episode as well, if you enjoyed what he had to share. 5 stars on Spotify if you're a windshield warrior like number 44, Evan. You can support our show directly by our on-chain Bitcoin address in the show notes. Our Lightning address is in the show notes. If you're an OG and you already know what I'm talking about, it's satchats@getalby.com. So remember, satchats is for educational purposes only and should not be construed as financial advice. Also, our guests' views are their own. Thanks so much, Satillionaires. We'll see you on the next one.